Welcome to the Deep Dive. Today, we're really getting into it, doing kind of an intellectual autopsy of a truly landmark book in trading, Jack Schwager's Market Wizards.
It's a classic for a reason, still so relevant.
Absolutely. And just so you know, our source material here isn't, everything ever written. We're working from a set of distilled notes, key insights, pulled from a really close look at the book itself.
Focused.
Exactly. And our mission, what we're trying to do is basically cut through all the fluff and pull out the most important nuggets of wisdom. What's it really teaching us?
Yeah.
And why does it still matter so much today, decades later?
Well, Schwager started with a really fascinating quest, didn't he? He went out and interviewed, dozens of the absolute top traders of that era.
The ones who were consistently profitable, not just lucky once or twice.
Precisely. These rare individuals who just thrived. And crucially, he wasn't after, a hot stock tip or some secret formula.
A magic bullet.
No. He was digging deeper, trying to find the underlying principles, the common ground that separated these market wizards from, almost everyone else who tries and fails.
So that core question the book tackles, is it just luck? Is it being some kind of genius?
Yeah.
Or is there something else, something maybe you can learn? What did he actually find?
Well, it boils down to something that sounds simple but is profoundly difficult to actually do.
Okay.
He found consistent success really came from a combination. You needed a sound methodology, a solid approach.
Right, a system.
Yes, absolutely. And you needed the proper mental attitude to go with it, the psychology.
Okay, let's unpack that a bit. Why has this book, which is, essentially just a collection of interviews.
Right, just conversations.
Why has it had such a huge lasting impact? Especially now, with markets being so different, super fast, algorithms everywhere, just drowning in data. Why is a book talking about traders from the 70s, the 80s still considered essential?
I think its staying power comes down to how it implicitly tackles those really common, often fatal flaws in how investors think and act. You could almost call them market sins,
Market sins. I like that. Like what?
Well, think about the big one for newcomers.
Yeah.
The allure of the guru, that constant search for easy answers, for shortcuts.
Someone to just tell you what to do.
Exactly. And the book just demolishes that idea by showing this incredible diversity of successful approaches. There's no single guru playbook. There are many, many paths to success.
Well, it's not saying copy this guy. It's saying look at how these different people think, even if their methods vary wildly.
Precisely. And another huge sin, letting your emotions run the show. Fear, greed, hope. They're not just feelings, they're powerful forces that can absolutely wreck even the smartest trading plan.
Oh, yeah. You see it constantly.
And the wizard stories, they're often quite raw about their losses and struggles. They offer these really profound lessons on confronting those demons, managing that internal chaos.
You make a quick buck, get cocky, bet too big, greed takes over.
Or you take a small loss, panic, and just ditch your whole strategy out of fear. Happens all the time. And maybe the most critical sin the book addresses, the one people ignore the most, is underestimating how vital capital preservation is.
Just focusing on the potential gains.
Exactly. Only looking at the upside, completely ignoring the downside risk. Schwager's book, through nearly every interview, just hammers this home relentlessly. Protecting your capital? That's job number one. Everything else is secondary.
It seems so obvious when you say it, but it's where so many people stumble. They treat it like gambling, not like managing risk.
And the final sin maybe is that ego thing. The need to be right, to predict the future perfectly, instead of focusing on having a sound process and just playing the probabilities.
Write that quote. Good trading is not about being right.
It's about making money. Exactly. That's one of the most powerful lines. You can follow your process perfectly and still lose on a trade. Or you can get lucky on a trade but have taken completely reckless risks. Being right isn't the goal.
So if it's not a book of secrets, what's the big unifying idea that pulls all these different stories together?
The central takeaway, I think, the real insight is that lasting success isn't about finding some external magic key. It's about cultivating this deeply personal blend, an alchemy, really, of three critical things.
Okay, what are they?
1, a sound, individually tailored methodology. 2, ironclad, totally non-negotiable risk management. And 3, unwavering psychological discipline. Those three pillars.
And it's interesting that the book is structured as these diverse stories, right? It's not a step-by-step manual.
And that structure is, I think, incredibly deliberate and smart, but showing trader after trader succeeding with vastly different methods.
Yeah.
Schwager subtly implies the real problem isn't a lack of strategies. You can find thousands of those online. The core issue is people don't understand how to develop and, maybe more importantly, how to stick to a strategy that truly fits them, their personality.
So the book is like a mirror. It shows you all these possibilities and forces you to look inward, to find your own way.
Exactly. It's a map, but it's a map of many different potential journeys. It emphasizes that your journey, finding your process, is the crucial part. That's way more empowering than just trying to mimic someone else.
Definitely.
And you hear it again and again from these wizards. Hard work, relentless discipline, and learning from failure, crucially learning from failure.
Yeah, some of them talk about blowing up accounts, right? Big setbacks.
Major setbacks. But they didn't quit. They stressed continuous learning, adapting as markets changed, and building serious mental toughness, resilience.
Which is such a stark contrast to that whole get-rich-quick fantasy that seems to constantly float around the markets.
Totally. The book works as this powerful implicit critique of that entire mindset. Market Wizards shows that mastery isn't a lottery ticket. It's a marathon built on principles, hard work, and the ability to bounce back. It really reframes success from a lucky break to a professionally managed, disciplined craft.
Okay, so for this kind of wisdom to even resonate, there must be some underlying beliefs, some foundational assumptions the whole thing rests on. What are those?
Well, the first big one, I think, is the assumption that markets, they're incredibly complex, maybe even chaotic at times.
Definitely chaotic sometimes.
But they aren't purely random. They actually offer exploitable edges, opportunities, but only to those who are prepared and disciplined.
So it rejects the idea of a perfectly efficient market where everything's random.
Pretty much. It assumes there are patterns, inefficiencies, maybe psychological tides, things that a skilled trader can actually identify and use. And the wizards found these edges in all sorts of ways, right? Technicals, fundamentals, macro analysis, even highly developed intuition.
Like Paul Tudor Jones looking for that alignment of fundamentals, technicals, market tone.
Right, or Richard Dennis believing certain profitable patterns just reappear across different markets and times. The shared belief is there's something discernible there, something you can understand and act on.
Okay, that's assumption one. What's next?
Assumption two is that elite trading skill is mostly forged, not just something you're born with. It's made, not innate.
So not just about having a high IQ or natural talent.
The story you hear over and over isn't about genius. It's about grinding it out. Relentless hard work, continuous learning, adapting, and, really importantly, correcting yourself after you screw up. Many of them started with basically just curiosity and a strong work ethic.
That famous turtle experiment seems like the ultimate proof of this, doesn't it? Dennis and Eckhart teaching regular people their system.
Exactly. It was a powerful demonstration that, significant trading success wasn't solely about inherent brilliance. It could be cultivated through training, discipline, sticking to the rules, and executing consistently.
So wizard status is an outcome of effort and principles, not just a genetic lottery win.
That's the message. And if you accept those two things, that edges exist and skill is developed, it leads to a really important implication. The trading game is always changing.
So edges aren't permanent.
Right. The wizards themselves were masters of adaptation. If edges shift and you constantly have to work to find and exploit them, it means the market itself isn't static. It's, you could say, malleable.
Which makes continuous adaptation not just helpful, but like a core survival skill.
Absolutely critical. It really pushes back against the idea of finding one holy grail system that just works forever. Your ability to learn, adapt, evolve your approach, that becomes maybe the most important virtue for long-term survival.
And underneath all of this, it feels like there's this profound acceptance of personal responsibility. Agency.
Yes, that's huge. The whole book emphasizes individual accountability, finding your method, and radical self-control. When these guys faced big losses and they looked inward, they adapted. They didn't just blame the market or bad luck.
Right.
The sheer variety of their successful styles underlines this point. You have to build an approach that truly resonates with your nature, your personality, how you handle risk.
So success or failure, it's ultimately framed as being in your hands.
Mm-hmm.
Your method, your risk control, your psychology. It's empowering, but also kind of intimidating.
Yeah. It definitely puts the locus of control squarely on the individual, which is a major shift from feeling like a victim of the market's whims. You are responsible for how you engage.
Okay, so we get the problem, the assumptions. How do the wizards actually build this mental operating system?
Yeah.
What are the core pillars of their logic? Let's start with that bedrock principle you mentioned.
Right. After you soak in all these stories, the single most foundational idea that just jumps out is this. How you trade is infinitely more important than what you predict.
Meaning your system, your rules, your discipline.
Exactly. That whole package, entry rules, exit rules, position sizing, how disciplined you are in actually following your own plan, that's far more critical than trying to guess the market's next move or picking the right stock.
Process over prophecy. Always.
That's the mantra. Despite all their different strategies, they all agreed. You must have a solid methodology. It's not about having a crystal ball. It's about having a robust, repeatable process for finding opportunities, managing risk, making decisions, and getting out. They're masters of their process, not necessarily fortune tellers.
And consistency comes from that process, not from being right all the time.
Precisely. Remember, good trading is not about being right. It's about making money. And you make money consistently over time by executing a process that has an edge, even if some individual trades don't work out.
It's like that surgeon analogy you used. Success isn't just the diagnosis, it's the meticulous procedure, the checklist, sticking to protocol under pressure. A flawed process can be fatal, even if the initial idea was right.
Perfect analogy. Their edge wasn't predicting perfectly, it was executing their plan flawlessly.
Okay, process is the foundation. But how do they figure out the right process for them? How do they decide their rules of engagement?
This leads to, I think, two really key mental models that emerge. First, this idea of a tailored arsenal, or maybe a better term is method-personality congruence.
Method-personality congruence.
The book makes it crystal clear. There's no single best strategy for everyone. Instead, you see this just dazzling array of unique, highly personalized approaches.
Like you said, Decoded systems, PTJ's discretionary macro, O'Neill's cancel-him checklist, Kovner's blend of macro and risk control, all so different.
And the killer insight isn't which one is best. It's that each wizard found or painstakingly built an approach that clicked with them. Their personality, their strengths, their temperament, how they handled risk and uncertainty. Schweiger really emphasizes this later, too. Find what suits you.
And why is that fit, that congruence, so critical?
Because if your trading method constantly clashes with your psychology, if it makes you anxious or impulsive or just deeply uncomfortable, you simply won't stick with it, especially when things get tough during drawdowns. That mismatch is a huge driver of emotional mistakes and, ultimately, blowing up. The wizards knew they needed tools tailored to them.
Okay, so build a process that fits you. Now, beyond the style of strategy, is there a common theme in how they pick their specific trades, what they look for?
Yes. They are relentless hunters of asymmetry. They're always looking for situations where the potential upside, the reward, is significantly bigger than the potential downside, the risk they have to take.
It's not enough for an idea to just look promising.
No. The crucial question is always, what's the payoff structure here? What do I stand to make if I'm right versus what do I stand to lose if I'm wrong?
Paul Tudor Jones is famous for that, right? Looking for at least 5-to-1 risk reward, risking $1 to potentially make 5.
That focus on the quality and the structure of the payoff is a really sophisticated step up in thinking. Let's call this principle seeking positive asymmetric payoffs. And a really useful tool that came out of this thinking, which Van Tharp popularized, is thinking in terms of R multiples.
Ah, right. R multiples, where R is your initial risk on the trade.
Exactly. You decide you'll risk, say, $100 on this trade. That's your 1R. If you make $300, that's a 3R win. If you lose the $100, that's a Nagna 1R loss.
And how does that change things?
It totally shifts your focus. Instead of asking what's my win rate, which honestly many wizards didn't obsess over, you start asking the real questions. How big are my wins compared to my losses? Am I getting paid enough for the risk I'm taking here?
Right.
It directly tackles those killer mistakes, like risking a lot to make a tiny potential gain, or the classic one, cutting your winners short while letting your losers run wild.
Okay, so you've got the right process for you. You're hunting for asymmetric bets. But the wizards scream this louder than almost anything. Best system in the world, flawed psychology, you're toast. The market will find your weaknesses. How do they build that psychological armor?
This is where it gets really core. This is the shield. First element, radical discipline and emotional control. Just that unwavering, often gut-wrenching ability to stick to your rules, stick to your process.
Especially when you don't want to.
Exactly. Especially when fear or greed or hope is yelling at you to do something else. It's about cultivating detachment from that moment-to-moment emotional noise.
I love that Victor Sperandeo quote. The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. It's hard.
So true, isn't it? And many wizards didn't just rely on sheer willpower. They used routines, checklists, even automated parts of their execution to kind of bypass their own emotions at critical moments, force themselves to follow the plan.
Okay, discipline. What else?
Second, and this is absolutely paramount, the sanctity of capital, expressed through obsessive, relentless risk management.
Sanctity of capital. Like it's sacred.
Almost like that. It's this profound respect for preserving your trading capital as the absolute non-negotiable foundation. It's not just important, it's the prerequisite for staying in the game. Ed Decoded nailed it. The elements of good trading are 1, cutting losses, 2, cutting losses, and 3, cutting losses.
You hear that echoed constantly. Limit the damage.
It means never risking too much on one idea, like Larry Height's famous 1% rule.
Right.
It means knowing your exit point, your max acceptable loss, your 1R before you even put the trade on, and then acting on it ruthlessly if it goes against you. No hesitation, no hoping it comes back. PTJ summed it up. Don't focus on making money. Focus on protecting what you have.
Protect the downside first. And the third part of the armor.
Embracing imperfection and learning from failure, which is ultimately how you build resilience.
Because none of them started out perfect.
Not even close. Many, like Michael Marcus, blew up spectacularly early on before finding huge success. PTJ talks about that devastating cotton trade that almost wiped him out.
But the key is, they didn't just quit. They learned.
They treated those losses like incredibly expensive tuition. Painful, yes, but invaluable. They extracted the lessons and kept going. Bruce Kovner learned from Marcus about being willing to be wrong. He said something like, you make your best judgment, you're wrong. You make the next best judgment, you're wrong again. Make the third best judgment, and then you double your money.
Wow.
That ability to take hits, adapt, stay humble, learn from adversity, that's a core part of the wizard mindset.
Yeah, that psychological armor analogy makes sense. It's like mental Kevlar for navigating the market battlefield where your own mind could be the biggest threat.
And these pillars, the process, the personalized edge asymmetry hunt, and the psychological armor built on discipline and risk control, they aren't separate silos. They interlock. They reinforce each other.
How so?
Well, it's easier to be disciplined, psychological armor, if your method truly fits you. Method, personality, congruence, personalized edge. Focusing on asymmetry inherently strengthens your risk management focus, sanctity of capital, and having that solid process gives you the framework you need to apply discipline and manage risk consistently. A crack in one pillar weakens the whole structure.
Right. And the language, like R multiples or method, personality, and congruence, it's more than jargon, isn't it? Right. It changes how you see things.
Absolutely. It reframes your whole valuation. You stop obsessing about just being right or having a high win rate and start focusing on the quality of your wins versus losses, whether the method suits you, if you're paid for the risk. It's a cognitive shift.
A hallmark of expertise.
And critically, the wizards show risk management isn't just defense. Yes, protecting capital is job one, but doing that rigorously means you survive the tough times. And crucially, it leaves you capitalized and psychologically ready to pounce when those rare, truly amazing asymmetric opportunities come along.
So playing great defense actually enables great offense.
That's it, exactly.
Yeah.
PTJ said play great defense, not great offense. But as you said, that great defense creates the conditions for potent, selective offense when the time is right. It totally flips how most beginners think.
Okay, solid principles. But let's stress test them. How do these ideas, born decades ago, hold up today? In these crazy volatile markets, think NVIDIA, crypto, COVID crashes. Do they bend? Do they break?
It's actually kind of remarkable how well the core ideas hold up. Because fundamentally, some things just don't change. Human emotion, still the same.
Fear and greed haven't been patched out of the human OS.
Not at all. Fear, greed, hope, despair, they drive markets today just like they did then, even with faster tools and algos. Jason Shapiro, a modern trader, said something like, the one thing that hasn't changed is human emotion, and that ensures trading opportunities will continue to exist.
So that focus on psychology, on discipline, is timeless. Schwager noted that too, right? Market moves are fundamentals, plus human behavior, and human behavior is constant.
Exactly. And risk management, ageless. Maybe even more critical now. Principles like Heist's 1% rule, defining your R-unit risk, cutting losses fast, you need that discipline in today's volatile world. PTJ's great defense mantra is just as relevant for navigating a crypto crash as it was for the '87 crash.
And adaptability, which the original wizards stressed. That's got to be huge today.
Absolutely essential. The way you find an edge might change, sure. The edges themselves might be different, maybe shorter lived, harder to find with all the quants. But that core skill, continuously learning, adapting your process, finding your unique angle, what Steinhardt called variant perception, that's still the name of the game for active management. Look at Chris Camillo in the later Unknown Market Wizards. Finding edges in social media trends. A totally modern approach, but the principle of finding an edge is the same.
Okay, so the core holds up pretty well. But let's play devil's advocate. What are the legitimate criticisms? Where does the model maybe fall short today?
Well, the biggest one, the one you always hear, is survivorship bias.
Right. We're only hearing from the winners.
Exactly. How many people tried similar things, worked just as hard, but just got unlucky or hit a bad market cycle, and we never hear their stories? It's impossible to know the true odds just by interviewing the champions. Some critics will say, oh, they were just cowboys who got lucky, or call it a pipe dream for the average person.
And Schwager himself noted some wizards didn't maintain that peak performance later on. Past success doesn't guarantee future results.
A crucial point. Then there's the cowboy trader era versus today's algorithmic age. Were there just juicier, more obvious inefficiencies back then, before HFT and AI dominated everything? Can those more intuitive, discretionary styles really compete against the machines today?
Peter Brandt, who was in the book, even said classical charting has lost a lot of its edge now.
He did. Although, as we mentioned with Shapiro, some discretionary traders are still finding success, often by exploiting things algos can't easily capture, like pure emotion-driven moves. But yeah, the bar is likely higher, the edge might look different.
And the book is stories, right? Compelling anecdotes, but not a rigorous quantitative study. Hard to definitively untangle skill from luck and those specific big wins they talk about.
True. And maybe the final point is the sheer unspoken difficulty of actually doing this stuff. Cut losses, be disciplined, control emotions, sounds simple.
Deceptively simple.
Exactly. Doing it consistently, under fire, with real money. Huge uncertainty. It takes immense psychological strength built over years, often through really painful trial and error. The book shows the destination, but maybe underplays just how brutal the journey to get there often is. Many traders only grasp the depth after failing repeatedly themselves.
But even with those valid criticisms, it feels like the core meta skills remained essential. Adaptability, discipline, risk management, self-awareness, learning.
I think so. Those skills are crucial no matter the market. Human psychology still drives opportunities. The wizard's real superpower wasn't a secret formula. It was mastering the process of developing systems, managing risk religiously, and controlling their own minds. The way you apply those skills might evolve new niches, new data, but the need for them doesn't go away. The book's lessons are really about building enduring mental frameworks.
And that survivorship bias point, it actually reinforces the need for process and risk management, doesn't it? If luck is a factor you can't control,
then you double down on what you can control, your process, your risk. It's the most rational defense against that uncertainty.
Right.
And maybe it helps to see the wizards not just as traders, but as entrepreneurs of edge. They didn't just follow rules, they innovated. They found unique niches, developed that variant perception, often went against the crowd. That takes creativity, hard work, conviction. They built a business around their edge, managed capital like it was oxygen and stuck with it. Those lessons apply way beyond trading.
Okay, so we've broken down the problem, the foundations, the system, stress tested it. Let's pull it all together. How do these pillars create a coherent system for dealing with uncertainty in markets or just life?
I think Market Wizards ultimately is a blueprint for disciplined thinking and action under pressure. The pillars we talked about, process devotion, the personalized edge asymmetry hunt, the psychological armor focused on risk and equanimity, they aren't separate things. They lock together, reinforce each other.
Create a stronger whole.
Exactly. Process gives you structure, a map. The personalized edge makes sure that map actually works for you. And the psychological armor lets you follow the map, especially when things get rocky, without freaking out or blowing yourself up.
It's like building an inner fortress.
That's a good way to put it. A system designed to acknowledge uncertainty, respect risk deeply, and empower you to navigate the chaos with discipline and resilience.
If you could only install one mental tool from this whole deep dive into someone's head, what would it be?
Not a single tactic. It's more holistic. It's an orientation. Let's call it the Wizard's Trinity.
The Wizard's Trinity. Okay, break it down.
3 core components, totally interconnected, indivisible really. First, process devotion. Just that unshakable, almost religious commitment to a well-defined, tested, and crucially personalized way of making decisions. Your operating system, your map. Second, risk primacy. Treating capital preservation, whether that's money, time, reputation, whatever, is vital as the absolute sacred foundation. Every single action gets viewed through the lens of risk first. What can I lose? Is it survivable? How do I protect my core? That's your shield, your oxygen. And third, emotional equanimity. That cultivated mental calmness, a detachment from any single outcome. Seeing things probabilistically, like a numbers game over the long haul, free from the distortions of ego, fear, greed. Your calm center in the storm allows clear thinking.
And why those 3 together?
Because together, they directly target the 3 main ways people fail in high-stakes, uncertain situations. 1, having a flawed or inconsistent approach. Process devotion fixes that. 2, taking catastrophic risks. Risk primacy prevents that. And 3, emotional self-sabotage under pressure. Emotional equanimity guards against that.
And you can see how that trinity applies way beyond trading. Business leadership, career moves, personal challenges.
Absolutely. It shifts you from being a passive victim of circumstance to an active, disciplined architect of how you engage with reality. It builds that anti-fragility we talked about, learning and getting stronger from setbacks. Process gives the structure. Risk ensures survival during the hit. Equanimity allows clear learning after the hit.
And it fosters that internal locus of control, taking ownership.
Exactly. Process devotion means you own your method. Risk primacy means you control exposure. Emotional equanimity means you manage your internal state. It pulls your focus from the uncontrollable outside world to the controllable internal one. That's a hallmark of high achievers everywhere.
Well, that brings us to the end of this deep dive into Jack Schwager's Market Wizards, a book that, decades later, still feels incredibly relevant, challenging, offering really profound insights. Maybe the ultimate lesson is that the market is this fierce teacher, not just about trading, but ultimately about mastering ourselves. Thanks for joining us for this deep dive. Maybe as you go about your day, just reflect a little. Which part of that Wizard's Trinity process devotion, risk primacy, or emotional equanimity feels like the one you need to strengthen most right now in whatever you're pursuing? How might focusing on just that one piece change your approach, maybe starting today?